Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network.
Before we get into today's show, there are a few things we have to go over.
Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent. I'm here with Chris Bates. G'day, Chris. How's things?
Pete, life's good. How's things in the UK? You're coming back to the land of Oz next week, I hear.
I'm flying on the weekend, actually, or next weekend. As you listen to this, I'll actually be possibly on the way by then. So, looking forward to it. Never enjoy the long-haul flights with kids, but, looking forward to getting into a Sydney spring and travelling around the country a bit. I'm doing the Rask Roadshow for a couple of weeks, so we've got a few events there. Port Macquarie, Newcastle, Sydney. So your last chance to get a few tickets for that. And actually, Chris, come to think of it, we're doing a workshop on the 22nd of the month, actually, the Friday afternoon. We've got a few spare tickets for that. So shoot us an email if you're keen to come along. We've got 2 or 3 spares. So looking forward to that as well, Chris.
Absolutely. Looking forward to that with Pete. And you're right, it started spring sprung. And I guess it's a interesting time in property markets. You see listings start to increase this time of year. We've absolutely seen a bit of a behaviour shift, a bit of an urgency there with our buyers. I think we're almost in double figures of purchases this week, which is, and some actual real big purchases as well. So, we haven't seen too many purchases over that sort of 1.5 to 2 mark. A lot in the sort of 500 to low 1 millions. But I definitely think things are shifting there. So what 3 stories are we going to chat this week, Pete?
Oh, just aside from property, there's nothing better than Sydney as you come into September, October, and the weather starts warming up and people start getting into that summer mindset. I'm really looking forward to being back in town for that. So, yes, this is our weekly 2 cents segment. Every Sunday morning at 7 a.m. you'll find our 2 cents podcast episode waiting for you in your podcast player. So the big 3 news stories we're covering this week, Chris. So firstly, a housing proposal for New South Wales, actually, very timely, to speed up supply using what they call pattern book housing. So interesting proposal there that's being considered by the New South Wales state government. So we'll take a look at that. Secondly, some slightly stronger market dynamics for property. In fact, AFR article by Nyla Sweeney with Louis Christopher predicting that buyer FOMO, or fear of missing out, is to explode as interest rates are on hold for a 3rd month and looking set to peak. And then thirdly, we never got around to covering the intergenerational report that was released a week or 2 ago, which kind of sort of maps out or predicts the future for Australia over the next 40 years or so. So just 3 or 4 interesting points to discuss from there too. So what should we kick off with then, Batesy? This pattern book housing proposal for New South Wales. So interesting suggestion. It seems to me that it's kind of mad that we've got into a situation where, so this proposal is for 375,000 dwellings to be built in 5 years in New South Wales alone, just in one state. The fact we're even talking about needing this many dwellings in 5 years seems kind of crazy. And we're obviously behind the 8 ball a bit in terms of building enough housing for the growing population.
Yeah, I think this is such a big story that, I probably mentioned a few times on the podcast, the work from home, the hybrid movement. I think the other big story, the trend to be watching is the battle between the NIMBY, I don't want to see any development. I love my suburb, how it is today, and the YIMBYs, yes, in my backyard. And I think this is, a lot of backing behind the YIMBYs right now, right? There's a lot of pressure with rental crisis plus a housing affordability crisis. And we're going to be underbuilding. And so vacancy rates and potentially if we start to see more price increases to properties as well, then there's even further frustration building for a lot of people wanting to get out of rentals and maybe buying their first place. So there needs to be an answer to that. Otherwise, there's a bit of social unrest. And I think Sydney in particular, we're talking about Sydney in this one, is losing its global competitiveness, I believe. If you can't attract talent, unless you can also say, hey, you could also rent easily and you could buy a house here if you want to stay here. I think if Sydney starts to become a place where it is the haves, the have-nots, and arguably it's already becoming that, and we can't attract global talent, well, how's our city going to evolve over the next 10, 20, 30 years? So I think it's a big issue, and solutions are going to keep coming up. And as Chris Min said, we've got to go up, not out. So that means more density. But, do we just want to keep building density where there is density, around sort of Waterloo or Green Square or Epping or St. Leonard's or Parramatta or Walleye Creek, or, there are, hotspots of density, but do we densify in the middle ring suburbs or even the inner ring suburbs with small, low-rise, small blocks of units, which basically are not what developers build anymore. They build high-density, greenfield estates, and you get the mum and dad sort of builders doing the small developments and stuff like that, but you don't see the big-time developers playing in the small segment too much unless they're doing the ultra expensive downsizer market. So what is this pattern book supply, Pete? I mean, let's talk about that as an option and why that's potentially not a bad thing to consider.
So it's The Guardian that covered the news story, and essentially what it is, the Housing Now group has argued that around 30 suburbs in Sydney basically need to be transformed by adding much more in the way of medium-rise apartment dwellings, higher density housing, as you mentioned, and that's to deliver 375,000 homes over 5 years. But the way essentially it's going to work is that you would pre-approve certain what they call pattern book housing designs that can be rolled out. And this is being backed by unions, it's being backed by universities, big business. So there's a bit of a push going to head in this direction. And I guess the general idea is if you've got pre-approved housing designs, you don't have to spend so much time in that constipated sort of planning approval system, and you can just get stuff pushed through much quicker. And I suppose the New South Wales Premier is sort of interested in backing the idea potentially. I mean, it has been sort of suggested by University of New South Wales that it's a good idea, but we can't get too bogged down in the aesthetics of how things look. I suppose there's a couple of sort of red flags there. When I hear about certain arbitrary target numbers being floated around, you start thinking, well, if it's just about numbers and people are saying, well, you can't worry too much about what things look like and the aesthetics, you do worry about the quality versus quantity argument. It sort of conjures up this image of sort of communist or Soviet cities where, the big drab tower blocks being thrown up at very fast pace. But I guess anything that can help to sort of free up the supply process at the moment would have to be worth considering. I think, Chris, one of the issues I see at the moment is, yes, new apartment projects at the premium end of the market are getting across the line because developers can make those work. But just for a city like Sydney, just a bog standard 2-bedroom unit development, it's very hard to make that stack up for developers at the moment. Construction costs are up 50% since 2019 for that type of dwelling. The availability of trades and materials is tough. Developers are struggling, many of them going into insolvency. And I just don't know that we're going to get the big numbers through, at least until they can charge more for the product, I guess.
Yeah, I like the idea that, Simon Custar, we've had him on the podcast, and I've been mates with him / work friends, I guess, for many years since I had him on our other podcast. And he said it really well. Like if you look at the major cities around the world, and he's from Germany, but, you could look at, the Paris and, Rome and all that sort of stuff. It's like medium height. It's not super, 30, 40 stories, and they're just built to last hundreds of years. They're built well. And I think if you're right, Pete, if you are going to do this and rezones, I think they were talking, we need to make 30 more Surrey Hills. Like that sort of Surrey Hills isn't super high rise. It's, that medium rise, and you got your cafes and your restaurants and your school, and, it's inner city location. So if we could sort of expand that out across the city, and I think, I do think aesthetics matter. I do think that, placemaking and making this apartment a really good place to live, not something that feels cheap and it feels that we're just getting the apartments in, because that's not going to be super desirable for people. So what you want to do is create a viable alternative to where they haven't got an option at the moment. A lot of young families say, well, I can't afford a house, I'm looking for an apartment, and then there's no bigger apartments. And then they're going, well, do I move up to Central Coast, or do I move down to Wollongong, or do I move regionally? Like, hopefully this will create another option for them, these sort of housing communities. I think they're quite big in Asia and things like that. But I guess it's getting access to this land, right? There's not this infinite land, and it's going to be a high cost acquiring the houses. There might have to be some heritage lost to create some of these locations and things like that. So, but I do think there's going to be a pressure to relax zoning, and in particular, not in where we usually would see housing supply built. And I don't think that's going to be across the whole suburb. I think it's going to be in little pockets that make sense to be more dense. But then they're going to be the quieter sanctuaries off those main roads, off around the train station. And so when you're investing now, I think you can't rely on the past and say, well, nothing's been built here for 30 years. Nothing's going to be built for the next 30 years. I think that's a bit of a false belief. I think you got to be embracing that this is going to change, but where is it going to change in the suburb? And can my property benefit from that, but also not be negatively affected if they do make it a bit more dense in the suburb? So I think you just got to be a bit more strategic.
Yeah, it makes sense. I saw Philip Oldfield, head of University of New South Wales School of the Built Environment, said that pattern book housing design ideas have been used since Roman times, so it's not a new idea, and actually widely used in other parts of the world as well. But he did say there would probably need to be some local input from architects, because you're not going to get very far if you're trying to prove the same type of housing in somewhere in the sort of leafy eastern suburbs of Sydney versus Parramatta, as you said, because there are different conditions, and what's going to work in one place isn't necessarily going to work in another. I think, like a lot of these suggestions, it's not going to fix the housing supply crisis on its own, but it is one thing that could be looked at as a way to tackle supply issues, which Sydney is at the forefront of. I saw Scott Phillips from the Motley Fool said, his view was pretty skeptical. What could possibly go wrong other than poor workmanship and corners being cut at the altar of political expediency? I must admit, when you see these big numbers thrown around, we're going to build 1.2 million dwellings in 5 years, and that's it. It's good to have targets, but when numbers are just the main thrust, then you do worry about some of the corners being cut, the defects and the poor quality, because we definitely saw that in the preceding construction boom. The quality of some of the stuff that went up was pretty diabolical in some cases, to be honest. So yeah, pretty interesting, and it's hasn't been backed through yet by the New South Wales government, but we'll watch this space. So
I think the final thing to probably say on that in my side is that Nightingale Housing, if you're listening to this, if that is a I don't know what it is, to be honest. It's a business that's a lot run for not for profit. I guess it could be I don't know if there is a profit there, to be honest. So do your own research. I don't know what it is, but check out their current projects, their past projects, the ones they're constructing right now. Jeremy McLeod, Breathe Architects, he's one of them. There are lots of different architects, the top end of Melbourne, who care about sustainability, but also care about communities, are building amazing buildings that are cut price. They cut away the frills, but they just build quality, something that's super nice to live in, super nice, great for the building and the shared community. And they're doing it at a cost because they're trying to, get key worker housing and things like that. So Nightingale are an amazing business to track. And, they went from one development in Brunswick maybe 5 to 10 years ago. And now I think they've got 15 to 20 on the go now. It's ridiculous. You've got tens of thousands on their waiting list trying to get an apartment. So the demand way exceeds supply. But if they could share their best practice together with the governments and accountants, and then they get developers on board, and maybe there's free kicks for the developers. They don't have to pay certain taxes if they increase their profits. I think there's going to be solutions that have to come up. So let's go to Story Pete too. What are we going to cover this week?
You're right. That's one of the key thrusts, actually, is actually getting developers to work together rather than against each other. Because if the pattern book designs are going to be used, then they will need to be shared. Second story of the week, some stronger property market dynamics in play with buyer FOMO, or fear of missing out, set to explode. AFR article, Louis Christopher of SQM Research being quoted there. So I guess what have we seen this week, Chris? So Australia's national accounts showed GDP growth was 0.4%, but actually, after accounting for the very strong growth in population, or at least the estimated population, GDP per capita was minus 0.3%, and the same again actually last quarter. So I guess the economy in per capita terms has been going backwards for the last 6 months. And that's because, I mean, obviously the population numbers are estimated, but about 2.4% growth in the population. It's record high growth, over 600,000 people. And I guess the big picture is the interest paid on dwellings has increased about 80% since the pre-pandemic days. And of course, household saving rates have absolutely plunged. They were at 23.7% when all the stimulus was being thrown around, now down to about 3%. So for a lot of households, by the time they've contributed their super and paid the mortgage, their savings, saving rates will be negative. They'll be running down their savings. So as a result of all that, Westpac is calling the next move in interest rates as down in 2024. I think if you look at futures markets, they're looking at the cash rate target peaking around January with basically no further hikes priced in and then falling away in 2024. And so that's led, I guess, to Louis' prediction of buyer FOMO being set to explode as consumers. I suppose interest rates have been on hold for 3 months now, and people are starting to anticipate the next move being down. I think going the other way, though, SQM's own figures did show that, as you touched on just before, Chris, listings are actually starting to pick up now, especially in Sydney and Melbourne, as vendors get a bit more confident about the outlook. So there's things pulling in both directions, I suppose.
So yeah, going back to October, November, sounds a long time ago, Pete. And in dad life, it's every day's a long day. But November, actually, we saw some shift in buys, right? We could see, we see clients come to us and they've already got a certain perception and behavior and attitude, and we can sort of a good litmus test. We see it very early on, and not just our current buyers, people coming to us, our existing clients, and also talking to other brokers as well. And we could see a shift back then, and that was very low listings. And that went, I think the Sydney, we're talking a lot about Sydney, we do a lot in that market, but also Melbourne and Brisbane. But, Sydney, I'm just looking at the numbers, are up 9% since the bottom of the market. So, the market's already rising at over 1% a month, Brisbane's up sort of 6%. Melbourne's a bit sluggish. But they didn't drop anywhere near as much as sort of Brisbane and Sydney did. So their bounce back isn't as much because it didn't drop as much, I would say. But we've seen that. We did see that May, June time to be a little bit concerning for a lot of our buyers. A lot of buyers wanted to sit on the fence. I think that was a really bad time for listings in spring, but it doesn't seem to be a case. I mean, it seems that listings are picking up, but total listings are really, really down. And so that means that listing absorption, so even though listings are coming on, they're selling. And so that's a good sign that there's enough healthy demand. And I don't think it's the best quality listings coming on the market either. So, usually in this situation, you'd see the poorer listings on the market, and then they'd maybe be accruing, days on market be running out, but that's just not the case. And I think 3 months of rate pauses, plus buyers are getting fatigued. When you get tired, you get a bit more, willing to make more compromises. You just want to end the pain. You just want to buy something. So I think the buyer pool's there. They're getting more and more confidence that rates aren't going to go to 5% as more and more rate pauses. And you can see the commentary starting to move into sort of rates are going to go down at some point. So that sentiment shift happens fast, right? This is in 3 months' time, things have shifted. Whether it's going to explode to, 20% or 30% annual price growth or something ridiculous like that, I'd say highly unlikely. But the market's already growing at more than 1% a month. And so even if it continued at this rate, it's in double figures for the year. So what's your take, Pete, on where we're at?
There's definitely a stock versus flow thing happening here. So yes, new listings in Sydney jumped by over 10% over the past month. So that's the biggest, I guess, increase or largest amount for new stock since SQM started doing this series back in 2009. Melbourne also had the same thing. New listings jumped 12.6% over the month, which was the biggest in about 7 years or so. And Canberra was over 20%. So there's suddenly listings are happening. I think if you look at total listings on the market, though, as you said, the long-term average is about 240,000, and we're back up now to about, on SQM's figures anyway, 224,000. So, I mean, the market is still pretty tight overall, but vendors are obviously feeling a bit more confident about listing. I guess largely because they're sensing the Reserve Bank has reached the terminal rate. I think just more on the anecdotal side, we've certainly seen an increase in inquiry over the past couple of months. I think people are, as you said, I think on podcasts previously, because people aren't as spooked now by interest rate rises, paradoxically, because when they started going up, 1.5%, people were quite fearful then, but now people are sensing that we're probably at the top or pretty close to it, and at some point rates will be coming back down. Some of the other sort of indicators that SQM look at, well, asking prices have increased, a bit of pent-up demand there, and distressed listings actually also fell again last month. So the number of forced sales just hasn't really transpired, and we're probably now just passing the peak of the fixed rate cliff. So maybe it's just with people basically hanging on to their jobs, the forced sales story just hasn't come to pass. So as you said, yeah, there's a few mixed dynamics there, but overall there's population growth is rampant, and there's just enough demand at the moment to keep on pushing prices.
Yeah, and I think we're doing a national podcast that, the regions aren't as a positive story, right? Apartment markets, for example, high density aren't as positive as, the low density apartments and the family suitable ones, and the housing market. And so I guess, for our listeners, is that this may not apply to you per se if you've got, when your property's in certain locations, there's 11 million dwellings. And so, but overall, I would say that the capital cities, there's a shortage of housing stock, and there's a pent up demand. And I think that there's not this distressed selling happening, so you're not getting a big increase of listings. And if people who are, have got a property and they want to upgrade, a lot of them are just sitting on their hands. And so if they've got a decent asset, because they haven't got the guts to sort of do this trade. However, I would say that's shifting, because in the last couple of weeks, we've had multiple clients, shifting from apartments to houses, and wanting to make that jump, because in their view, the last time they want to do this is when rates are getting cut. And they know that that's not going to be a great time to be buying when people's perception is that rates are going down. So everyone wanting to get ahead of the market, well, to be honest, to get ahead of the market, you had to be buying when there was peak fear, and that was October 2022. It's not October 2023. So, that would be my take on where things are. Pete, what's the next story, intergenerational one? I mean, these reports come out reasonably regularly, these big government reports, and I feel like they spend a lot of money producing them, a lot of resources, and then people read them for a few days and then they get forgotten about. What's your take on the intergenerational report?
You made a good caveat there. Obviously, we make a lot of these points on a national basis, but when I look at the asking prices that SQM reported, the biggest increase over the past year was for units in Brisbane, and also asking prices in Perth in double-digit growth territory. But as you said, a lot of the regional markets in particular, I think as we covered actually in last week's podcast, a lot of the regional markets have seen double-digit declines. So yes, definitely a caveat emptor, and certainly look at your local market. Yes, the intergenerational report. It's a bit of a marketing document, isn't it? It kind of sort of highlights the things that the government would like us to consider. I think if you look at the projections for population growth out to 2063, it's actually interesting looking back at the graph. I think if you look up to around 2002, started the mining boom, population growth in Australia was just ticking along, and then suddenly it just kind of ramped up. It took off dramatically. A lot of the people then, of course, were going to Western Australia and Queensland, Northern Territory. I think the weird thing was, though, when we got to the peak of the mining boom, 2012, 2013, the population growth never really slowed down. It just kind of shifted across the Sydney and Melbourne and the services economy. And we've just kept on going, at least until the border closures through COVID. So generally, the intergenerational reports have tended to, quite significantly undershoot in terms of their projections. And the reality is the population growth has been very high. If you look out 40 years, we're probably looking at, I guess, a big Australia population of around 43 million, up from, where are we today, just under 27. So it's massive growth. A lot of that, of course, will be Sydney, Melbourne, Brisbane, and Southeast Queensland. We do potentially have an aging population, but hence the target, of Australia's immigration program being towards young migrants. I think there's the population story is going to get more debate, Chris. I mean, even just on that previous story we touched on there, the need for 375,000 dwellings in 5 years in just one state. I mean, I don't know that anyone's really articulating the benefits of this kind of rapid pace of population growth. And don't get me wrong, I'm a migrant and I'm pro-migration, but this is proper breakneck population growth. So I wonder whether some of these projections, well, who knows what will happen in 40 years, but certainly population growth as a point for debate will certainly get more focus, I guess, over the coming years.
Yeah, absolutely. I always laugh at they did a chart on it. Migration for the next 40 years is 235,000, and it just goes flat, the chart. Like it's going to go up and it's going to go down. And this is our number for the next 40 years. And they've got it wrong a lot in the past, haven't they, Pete? I mean, they've underestimated the population and we're way ahead of what they thought it was going to be. And, I guess it's a political thing is they're saying, well, that's probably something that people can digest. But, if, great talent and money wants to come into the country, it's hard for them to sort of say no, right? Whether it's private schools or, cashed up sort of downsizers even. They have these, visas that you could basically buy yourself a residency, things like that. So I think that migration is not going to go. I guess it's just figuring out how do we fit them in, but still keep the benefits of the social fabric, I guess, and also create this housing. And I think that's why when our first story, the NIMBY versus YIMBY, I think that's also, if that gets solved, that also aligns with a fast-growing population. More money for councils, more money for governments. They can start doing more infrastructure, because they can forecast better. So I don't know. I think this is playing into that story as well. It's showing that we can't just sit on and say, well, let's not build. We actually have to keep building, not just for our current people here, but because we're going to have to keep growing our population. Otherwise, we're going to have issues with an aging population where there's less people working, supporting less people retired, and the pressure on our aged care and our pensions. And, if that starts to get too lopsided, you can look at countries around the world that would, die for, more people coming in of younger ages, right? And then some countries around the world have heavily, like India, for example, have got amazing weighting towards younger people that will drive the economy. So, that would be my take with population. We can't be ignorant that we don't need it, because otherwise we'll have an aging population, but we also need to, I guess, carefully manage it within our communities.
There's a number of countries, particularly Canada recently, United Kingdom, New Zealand, and obviously Australia, going very hard on immigration. I mean, partly that, in the short term anyway, increases the participation rate in the labour force. It effectively slows down the ageing of the population, at least in the short term, and it reduces the dependency ratio. As you said, if you bring in talent, that's going to boost innovation, it boosts headline GDP, but it is putting a heck of a lot of pressure on infrastructure, housing, transport, all of those sorts of things, particularly in places like Melbourne. We've seen real challenges there. I think as a portfolio investor in property, because I'm not a great market timer. I try to buy counter-cyclically to the extent possible, but I guess it's graphs like this that make me think that property, certainly for people like me anyway, inherently a bit lazy, tends to work best as a kind of a long-term investment. And if you're looking at a graph over 40 years, it's not like you go to Japan or South Korea or some of the countries in Asia where the population is actually expected to start falling away, and China actually to some degree. Australia's gone down a very different route, basically, rampant population growth at the moment, and projections out over the next 40 years of more of the same, 400,000 every year. So, look, I mean, there's different ways to do real estate, and there's no right or wrong per se, but it's, for me anyway, and I don't like paying capital gains taxes either, I've tended to try and buy stuff, buy in the areas that are effectively relatively cheap at that time, or where sentiment is low, and then just hold on for the long term generally. So I guess there's different ways to do it though.
Yeah, and I think there's going to be a pressure for the government to raise more taxes, right? And so, there's going to be absolutely tax changes probably for the negative, over the longer term. For the negative, you'll be paying more tax, I would say. I think there'll be a inheritance tax, which is common around the world in the UK, US. Who's to say that doesn't come in here? Who's to say the house still grows tax-free? Who's to say it doesn't get included in the pensions test? I think some big tax changes that you can already see them targeting super. That's an easy win. Targeting people with more than 3-4 million. So I think tax changes and inequality is obviously getting worse, and so that'll be one attempt at sort of reducing that.
I suppose it's the first rule of robbing banks, or whatever it is, go to where the money is. And superannuation would be an obvious place to look. I think certainly the intergenerational report suggested we'll need to shift the focus away from income taxes, which we're already very dependent on in Australia. They're very high as well, at the top rates of tax, pushing 50% really at the top bracket. So we'll probably need to move towards some other forms of tax, death duties, as you mentioned, maybe more land tax, or I think higher GST often gets a mention. So there'll definitely be some shifts. And I suppose one of the things this document is trying to do is maybe pave the way for some tax reform, maybe in Labor's second term if they get up. Some other interesting points. The healthcare sector is going to require huge investment and employment, I guess, over the coming decades as the population grows and ages, which I think is, noteworthy for the housing market, sort of more aged care housing, downsizers and so on. Also for commercial property though, Chris, we'll need obviously so many medical centres and things like that. And I suppose just one of the other things that was touched on, heavy investment in renewables is also to be expected. Australia has obviously been very rich in LNG and coal, but over time we're expected to shift more towards renewable energies. So some really interesting sort of graphs and charts in terms of the age structure of the population, but basically getting bigger and older over time, and but maybe some gradual shifts in terms of the way the economy actually runs.
Yeah, and I think it's just interesting, all these sort of demographics and governments. I think it's, you've got to say with a grain of salt, right, as we sort of mentioned, but ultimately it's good to track these things. As someone's investing in the market, you just want to understand what are the big longer term trends, how things are going to shift with demographics and government policies, and cities are going to evolve. Because ultimately, if you're going to hold something long term, you want to see, is that going to benefit me, or is it going to potentially make that asset at risk or give it lower growth? And so you always don't just be in this confirmation bias and say, I buy and hold, I'm never going to reconsider my options. I think that's potentially, maybe you could have done that in the past and still got your returns, but I think there's still going to be a flight to quality, and some assets are going to grow much better than others over the next 30, 40 years.
Yes, I think there's always a bit of a bifurcation in the market, especially when you get to the downturn. So definitely you need to keep an eye on what's happening in your local market, and some big interesting trends there. So I think that's about it for this week. So just to summarize there, pattern book housing is the latest wheeze being proposed, this time for New South Wales to speed up housing supply. But of course, it's not a quick fix, and definitely going to be some challenges in terms of supplying the Sydney housing market over the next 5 to 10 years. Secondly, buy a FOMO to explode. Well, sometimes even the headlines themselves can do that. You see, all of the major banks are now predicting house price growth 2024, 2025. So, I mean, that in itself actually does bring more buyers back into the market when there's the doomsday predictions have kind of dropped away from a year ago. And then thirdly, intergenerational report projecting a big increase, as it always does, I guess, in the population over the next 40 years, but maybe some changes in terms of the bigger parts of the economy. And obviously the population will gradually age over time as well. So what have you got on over the next week, Chris?
My dad's in town, actually. He lives in Melbourne. So, a lot of family time. Nothing besides that, to be honest. It's head down, bum up for me. I think we've had a couple of holidays in August. So, it's, let's get through till Christmas now.
Yes, and I'm urgently trying to catch up with everyone and get everything finished before I jump on the plane into Kingsford Smith. So if you want to catch up with me, Pete Wargent Blogspot is my daily blog, or at Pete Wargent on Twitter. And if you're not busy in Sydney on Friday, the 22nd of September in the afternoon, we do have a few spare tickets for Chris and I's masterclass just down at Circular Quay. So if you're interested, just shoot us an email, and we do have a few spares. And Chris, if people want to get in touch with you at Blusk, where can they go?
Jump in the show notes. You've said it 100 times before, but absolutely, just fill in the form and come chat to the team, and we'd love to have a chat.
Too easy. All right, well, have a great weekend, and I'll see you next week, Basey.
Happy Sunday, all.
Cheers.